just going to go ahead and break out some new earnings number that we have from Oracle. Now, on the second quarter, and by the way, the stock is up about 1%, had been up as much as 3 or 4% after our trading. Second quarter results, adjusted revenue came in with a beat, $12.28 billion, up 18% year over year, best the Wall Street estimate of $12.02 billion. In terms of some of the how that breaks out, cloud services and license support revenue, that was in line at $8.6 billion, up 14% year over year. Services revenue also in line with expectations, $1.39 billion, up 74% year over year. Here's where we saw some beats. Cloud license and on-premise license revenue, that's $1.44 billion, came in ahead of estimates of $1.3 billion. And then service hardware revenue of $850 million, that's up 74% year over year. And that is in line with actually that best the estimate of $767.1 million. A couple more numbers we've got to throw out there. Adjusted EPS, $1.21 versus $1.21 last year, but besting the estimates of $1.18. And adjusted operating margin, 41% versus 47% a year ago, and better than the Wall Street estimate of 41.6%. Just a quick commentary here. Without the impact of the U.S. dollar strengthening compared to foreign currencies, Oracle's reported Q2 non-GAAP earnings per share would have been 9 cents higher. So that U.S. dollar really weighing on some of those results there as well, Seana.
All right, well, let's get more reaction here. We want to bring in Daniel Morgan, Synovus Trust, a senior portfolio manager. Dan, great to see you. So beat here
Hi, Seana.
From Oracle on both the top and bottom lines. We're seeing the reaction in the stock and extended trading. But what's your initial take? I know you've only had a minute or two to dig into these results, but what do you think?
Well, what was very encouraging, Seana, was the cloud revenue. That came in at $3.8 billion. That was up 18%. And, you know, we all think of Oracle as a company that's a dominant player in the relational database area. They have 42% market share, dominant in enterprise resource planning. But the big thing that the street wants to focus on is how are they growing their cloud business? And it looks like from the numbers that you just read, they beat on 2 of their major segments out of 3 in terms of expectations. So it looks like the transition for Oracle as being a dominant or a major player in the cloud space is still intact. And so overall, it looks like a great quarter.
Hey, Dan, Pras here. Do you think companies like Oracle involved in the services and cloud servicing sort of operations are better sort of situated right now compared to like your standard hardware tech companies?
Well, you know what's interesting about Oracle is they have over 400,000 customers. And of those 400,000 customers that use mostly their database, only about 35% of them have moved over to using their cloud service products. So there's just a tremendous opportunity for them to convert their existing base. Just about every shop has Oracle in it, and moving those over into services. We have to bear in mind they were late to the game. Larry Ellison was very late making the migration to cloud because it was a subscription-based model, and he was used to the old licensing maintenance model, and it was more profitable. But he's had to move forward, and they've done a great job in terms of adding new products. But if you look at, you know, platform as a service, infrastructure as a service, and software as a service, they're still all kind of single-digit market share. So they have a lot of potential in terms of converting people over into their cloud products.
And Dan, I was honing in on that comment regarding the U.S. dollar, that adjusted EPS would have been 9 cents higher. That's from $1.21, so that's a significant percentage higher as well. Just in terms of Oracle and maybe any other companies that you follow in the space, how much of a headwind has the U.S. dollar been?
Yeah, FX headwinds were a big item as we closed down in the third quarter with a lot of our big software companies that we follow, Salesforce, Microsoft, and so forth. So that's a big number, 9 cents. That would have been even a bigger beat than what they had on the EPS line. So that obviously puts a negative effect on top of revenue growth for these software companies that do a lot of business overseas because of the strength of the dollar. And we saw that with Oracle. So I think that was kind of baked in, kind of built in to the report. But the 9 cents is a little bit more than what I was kind of anticipating. So that would have even made it go up even more, right? Yeah. If we didn't have that FX headwind.
Dan, looking out, though, into 2023, how do you see Oracle holding up given the macroeconomic pressures that we know not only Oracle is facing, but every single competitor out there and across all industries?
Well, Oracle's in a unique position. I mean, they only traded about 15 times earnings, so their multiple is very low. You compare that to companies like Snowflake and other companies that are not profitable, they're in a much better position than they are. As I mentioned before, they have a huge installation base. So a lot of their revenue is reoccurring. So they generate a lot of cash flow. So I think what's kind of interesting, guys, is, 2 years ago, we weren't talking about Oracle, right? We wanted to talk about companies in the software space that are growing 25, 30% a year, like Adobe. Now, all of a sudden, all that growth is kind of vanished, right? And they have that big customer base that they're able to harvest that revenue from. So now we're looking for consistency, right? And low multiple stocks that don't get hurt as much if they miss. And Oracle's beating, kind of like an IBM right now, or ADP or Citrix Systems. All those value plays in tech are doing very well. So I would expect Oracle going forward into 23 to be positioned very well compared to some of the high flyers in that space, 2 years ago that were going public with no earnings that no one's talking about anymore.
Hey, Dan, so Larry Ellison has some pretty positive words to say about Cerner. It's a new acquisition about healthcare tech company. Do you think you see more of these kind of buys from Ellison and crew coming up in 2023 and beyond?
Yeah, Larry Ellison is notorious for acquiring companies. I don't know how long you've followed Oracle. I've been following it for over 30 years. They bought PeopleSoft. They've bought some huge companies in different spaces to get a focus. And the movement towards Cerner was a good deal for them because it gives them access to the healthcare space. It allows them to use their cloud products and their efficiency and data management, all things they're really good at in making Cerner more efficient. So I would expect them to do extremely well with that deal. And Oracle and Larry Ellison has a tremendous history of acquiring large companies and pulling them under the hood and moving forward and doing very well with them. So that's going to be very accretive too on their top line in terms of revenue, because you're putting $27 billion company on top of what they have now. So it's a good deal for Oracle.
Dan, we'll have to keep an eye on those deals for next year for Larry Ellison and crew. Thanks so much, Dan Morgan.